Good morning, guys. It's Simon with ToughTrader.com and Trade and Perform Coaching, doing the market preview for the 21st of November. We are gapping, right? Not not unexpected. We looked for this yesterday. Not exactly this gap, but we were looking for the markets to. Let me mute everybody out here real quick. There we go. I was looking for the markets to accelerate to the upside this week. We usually have one down day during Thanksgiving. The rest of the week is up. Obviously, the odds say look for long trades. Members, I put out a video yesterday on using the advanced decline line. If you have not seen it, please take the time to look at it. It will help us out on exactly mornings like today. So real quick look, Russell is up 11 points. It's on a tear, right? I am more interested in finding a way to get long than I am finding a way to get short until we stop one time into the upside. I'll cover that in a minute. Crude oil is up 6 cents and well off of its highs. And obviously everything else is showing risk on. Gold took a battering yesterday, minus 20. So let's jump into the day real quick and look at structure, specifically what we look for from ES. You'll notice that I churned this from a white zone, right? So hold on one second. I'm getting feedback. I need to figure out why. I think I found out why. There we go. That fixes that. I turned that from a white zone to a yellow zone, right? And the reason why I did that was because we are consolidating in front of it. There's no rotation up into that area, and there's no give on the sell side, right? We were weak. When you have a slow market like yesterday, sellers, if they're there, have an opportunity to step in and really push down. We saw they attempted to do it in NQ. They just simply could not do it. There's a complete detach between NQ and ES. It was a little bit frustrating. I had worked alongside trade on NQ yesterday and could not get it to stick no matter what I did. So that was a little bit of a frustrating scenario. Let's go look at that really quick on where we're gapping to. 25.92 and a quarter, right? We trended straight through this area, not shocking, right? That is Globex high. I have no desire, right? We did not have a very good high there. It was a weak high. There's no question about it. I'll cover that in a second. But I have absolutely no desire to step in front of that gap. I'm looking for a way to get long. Now, normally I would say that I would like to get long at the open gap per the video that I put out for members yesterday. However, that's unlikely to happen, right? I'm going to look for any initial weakness on a pushback in towards the half gap, right? Which if we gap there right now, and if we measure the half gap from yesterday's close to here, puts us into a backside test as TPO points of control, both the naked volume point of control and the TPO point of control. At about the 50 retrace, I will be entering a half-size position. I'll be using a 6-point stop, so that's going to be 3 points total, right? I don't have another way of doing this because the risk is I'm going to come all the way in and have to reload again at the open gap, right? If the rally falls apart, it's unlikely, but if the rally falls apart, I'm going to have to reload again at the open gap. So my plan is to look for the first push down towards the 50 retrace if we get it. If this market gaps and goes and doesn't give me any retrace, right, I might take the 0 tick trade, but I doubt it. My specialty is not grabbing trend days up. So if they give me an in by pulling back and I'll watch the PA, I'll take it on reduced size. And if I take that trade, I want to be clear, I am shooting for a 5 to 10 point trade. Okay. If I don't get that, I will get stopped on the trade. Again, this is in an effort to get the one-to-one risk reward. I am not trying to trade this off of a small number. We're going to look at the overnight. I'm not trying to grab 1 or 2 points. I am trying to grab a 5 to 10 point trade out of this, right? So if they don't give it to me, they don't give me the opportunity to get risk where I need it. That's okay. I can afford to pass on this. I get plenty of winning days. Today does not have to be in the books. 25.79 and a quarter, if that matters, is Globex low. I have so many lines in this little area because of the small range that I hate to put another one on there. But here's 79 and a quarter. I got a feeling they're just not going to let me in today, and I'm all right with that. The alternative to this entry, by the way, right? The alternative to this entry, I'm going to just show it to you instead of trying to guesstimate it. Okay. is this bar right here. See how we open up? Okay, so I'm looking at 1116, right? So you can go look at the stats from 1116. I used this again in the video last night. First bar was up, right? We never traded below prior bar. We traded back into it. Your alternative entry with the tight stop is entry on the first 5-minute bar, a stop right below. It will not prevent you from taking a stop. I can show you just as many examples where we tick one tick below, or we tick 1 point, or we come into half gap. However, on very strong opens, we are gapping above in this particular case, just like we were on this day. We're gapping above prior day's high, right? So you can expect people to attempt a response there and a response here on this day, right? That's what I would have said would have been my trade plan, would have either been to look for a long or to modify it and look for the half gap, right? Which would have been, at this point, would have been back here. They obviously didn't give me any of those choices on that particular date, right? So the most aggressive, right, is just buying the close of that first 5-minute bar. Make sure we end up with the 5-minute bar, stop right below, right? My entries are going to be at the half gap and at the gap fill if they give me a pushback, right? Again, I normally am a fade trader, so I usually need a push back in. For those who aren't familiar with the way I trade, normally I need a push back in. Notice this did not give up the ghost. So let's talk about the top of the range because it's very important. This did not give up the ghost, right? It gave a nice rotation down if you look at the end of the day and the pattern that it followed there. And again, I break it down in much more detail while we're trading. That was a rotation down from 25.89 back down to 25.83. It was a 5-point trade. There was nothing wrong with this trade. Look at the characteristics that set it up before it got there. We went sideways, right? My first requirement is that we trade in some semblance of a sideways consolidation for 2 hours. This went from 11:45 until we finally pushed up at 1300, right? So 11:45 to 12:45, it's only an hour and a half, right? It finally exhausted, then it trapped back in. You'll see that right here. See how it trapped back into the top of the range, exhausted up, right? Pushed back in, trapped underneath, gave you a little backside test, and that's what rolled down. The total rotation here intraday was from 25.73 all the way up to 25.89. That's 73, 83, 15 points, right? Markets, ES tends to get exhausted at 15 to 20. On extreme days, it's 20 to 25, right? So I'm not looking to, I'm going to use this as my model. I'm not looking to do anything until I consolidate sideways for at least an hour, right? That's my first buffer against getting sucked in on the short side, right? So I'm not saying that the market will go straight up today. It looks like it's going to gap and go, right? That would obviously be the conclusion that almost anybody would have. I will need to see at least a consolidation sideways for at least an hour and then a setup within that process, right? If I'm going to short, I highly doubt that I pull the trigger on any short side today, right? I'm really hoping for a push down. The next choice, if we insert tick here, we look at tick and we pop in the 0 tick right here. So we can see the tick started off at positive, what is that, 800, right? That's fine. That's indicative. Positive 1,000. That's indicative of trend day up in alignment with what we understand, right? If you look, your first 0 tick opportunity, right? This would have been close enough for me, right? And notice that the market was already running away to the upside by the time you got a 0 tick. See, this is actually a perfect trend day up because by the time we came into the 0 tick, it just couldn't come in at all. When we consolidated sideways here, as tick is coming in, it just pushed up. What you would like to see is a tag of that 0 tick while we're in this portion of the rally for a continuation higher, right? So if you'll visualize, if I could have gotten a 0 tick in here, that was my other way of getting an entry. So on this particular day, the only reasonable entry I see, because I don't chase up, would have been at the close of that first 5-minute bar. You can also aim for the mid of that first 5-minute bar and see if they give you any ability to push in. If we trade sideways, the fourth way is, right, if we go sideways for 20 minutes and can't get below that first 5-minute bar, right, consider a long for a push to the upside. Very clear, very concise. There's no other way to catch a trend day up that I know of. I think they're the hardest days for day traders because they force you to buy up and they create the bad habit of chasing the market. So I've already resigned this day that I will cut trade size to make sure that I don't get smoked if I'm wrong, right? And I've already come to a total peace that if this thing just opens up 3 bars in a row, doesn't give me any sideways, doesn't give me any push down, doesn't give me any opportunity, I'm not really interested in shorting. I can tell you I have no intention of putting on a trade late in the day today. I'm just simply showing what you need to look for before you consider putting on a trade, right? I would look for sideways trade for at least an hour, preferably 2 markets that break down, or at least go sideways and don't smoke you, tend to consolidate from the top side for 2 hours like this, okay? And even then, you don't always get the roll down. But on days where you do get the roll down, this is what it looks like. So this is a day where, so if you notice, we opened up, right? And this failed. Where I would have been looking for a trade on this particular day, let me show you why, because this is what I have concern. If you took this first 5-minute bar, you did okay on this day. You got an extension up. You got an opportunity to get out. You got an opportunity to move your stop to the low, right? My trades on this day, looking at this exact same scenario, we gapped above prior day's high. We opened with a 1,000 tick. We came into a 0 tick trade right here, right? It already extended up, right? Like I said, I'd prefer to trade sideways, right, into the 0 tick and then get the 0 tick. So then you get the pop. Everyone was just uber eager to get in here, right? What were the signs that it failed? First of all, we got below the first 5-minute bar. First sign that there was a problem. I would have said that morning, I am looking for a half gap, right? Which actually ended up, I keep adjusting half gap to whatever the swing high is. That would have been my first entry, just like this morning. So I'm trying to show you in detail, right, what I'm looking for and what that setup would have looked like in the past, so you understand how I'm trying to deal with a gap up. And this is both an NQ and ES. That would have been my first entry. You'll notice that would have been, even though the rally failed, that would have been my first entry. My second entry would have been right here at gap fill, right? I would have taken a little bit of heat, and I would have done all right on that trade, and I would have gotten the extension out. That, in a nutshell, are my 4 options for entry today. I can buy at the top close of the first 5-minute bar, which I'm not doing, right? I can buy at the 50 retrace, which I am doing, right? That's my trade plan. And before I keep going, for those who are new in the room, because I forgot, past performance is not indicative of future results. This is my trade plan I'm sharing with y'all. Please understand, I do lose money sometimes, right? No secret to that. All traders lose money, right? I view it as a cost of doing business. It's normal. If I don't want to lose money on a day like today, none of these setups are in my top 100, top 10 setups, right? All my top 10 setups involve pullbacks, right? Getting long for the U-turn. This involves none of that, right? Lastly, please have a risk management plan in place. If you're losing money consistently, slow down. It just may not be your market if you're losing money consistently. You may be a good trader without the market you need, and unless you found a way to adapt to this market, you'll be very frustrated. So on this day, first 5-minute trade entry worked, 50 retrace worked, gap fill worked very, very nicely, and this was on a total rotation down, right? By the time we got to that gap fill of 25, let's call it 85, down to 25.72, almost 15 points of rotation, right? You'll also notice that at the 10-point rotation down, you got a rotation off the 50 retrace, the 10-point rotation down, and the gap fill. These are the 2 entries I am most interested in, right? We get above our last seller right here on the largest up bar after a series of down, right? So see how we got an inverted hammer here? This is on a stretch, largest up bar. I'm looking for a press back into that bar to really load up to get my push to the upside, right, in the afternoon. This is what I hope happens. I give it very low odds of actually getting the fill, but if it does, I will be prepared. That is my trade plan for today, and it mimics that trade plan on NQ. Does anyone have, any of the members in the room have a question about that trade plan? Is that clear and concise? Guys, I'm waiting for any kind of response to make sure I was clear and that no one's confused about what I intend to do this morning. Was clear. Great. Okay. Daniel, to answer your question yesterday when you were looking for the push to the downside, this is what I was concerned about and why I was hesitant to call it short. Just FYI, to circle back around on your question from yesterday. Great. So now let's go look at the profile real quick and see what we can see, right? One second. And I wanted to, oh, I have one more thing to address before I do that. So you'll notice I've adjusted back the white zones on both CL and all the other charts. You'll notice that overnight, let me stretch this out. Wow, this is painful. Here we go. Push straight into the white zone, rejection out. That took place. Hold on a second here. Let's press this down to a time frame we can actually relate to. There we go. There we go. Push into the white zone, right? 56.67 to 56.96. So the first question I would have is, if the risk was to the back of the zone, right? This is a 30-tick zone, right? What could have you used to enter this trade had you been trading in London? Well, first of all, since the open of London at 2 a.m., largest down bar inside the white zone, biggest down bar. You could have used that with a stop right above or a stop behind. You could have simply entered at the front of the white zone. What was your target? Green zone back below. It's not a zone I'm taking a trade from. Why? Because it's where we closed yesterday and it's likely to get chopped through, right? So you could have used it. It's just simply not a high odds location. That gave you a rotation from the front of this zone. 67 to 38 is 30 ticks, approximately the same, very close to a 1-to-1. Got it. So just so you know, and Peter's very good at this. He wrote to me this morning. He goes, "Morning, Simon. Just FYI, Chicago Fed came in very strong. However, bonds and gold are rising, and DXY dollar index may be about to roll over. Don't know if it means anything today, but it suggests a very near-term top. It wouldn't surprise me. It's very hard to get a short to." Yeah, I agree, Ron. It just suggests. Peter, if this is any other week, like I said, I'd be looking for shorts. It's against my religion to short these gap ups when it's this strong. Okay. James, I need you to remind me in an hour to give you the link to your video, please. It is uploaded. Okay, let me think through here. Up into white zone, 30 ticks from here, from this bar, the bottom of this bar, 56.70, you definitely got a 1-to-1 risk reward. This looks, if you're looking for a model of what the short looks like, this is what it looks like. A changing character, the biggest down bar inside an area of rejection. This is what you're looking for a push to the downside. If you want to fine tune the zones, you can simply take the front. Just know you're going to have to take no, I'm with you. I understand that, Peter. You just understand from the front of the zone, you're going to have to take some heat into the zone. The zone was designed properly, and we rejected properly. My target for a long today, if we push down, which looks doubtful in a risk-on environment, this yellow zone would be my first target. It's a nice fat rotation down. And then this is the bottom of balance from the prior couple of weeks. If you look at a bigger picture here, we'll just throw this onto an hourly so you can see it easily. You can see we consolidated here before breaking. We balanced in here. I would expect an attempted response back up. The only thing that would worry me is if we got down here, is we'd be below the first trend line, and they might make a run for the second trend line. But again, that's a big stretch. We're making higher highs and higher lows through here, and it looks like, and so what you want to see that change, right? This is an hourly. If you're going to get bearish, right, what you want to see is that we wouldn't have come up and we haven't made a higher high in this sequence, right? So now you've got to push down, right? And if we don't clear this high, for those who are bearish on oil, right, if we don't clear this high, now you've got a chance to come down and test this balance. You're going to have to break this balance to the downside to get a continuation lower. But this is a reasonable target if you're short, if you're bearish from here. All time frames are up, and if you pull this, you'll see all our trend lines when we crunch this down. All trend lines are up. We have simply not broken, right? So anyone who went with the theory of, hey, we're going to roll over, outside of scalps and swing short-term swing trades, you have not been able to make this stick. Okay, enough with this. Russell is breaking out. There's, by the way, yesterday on Russell, I want to point out, if you go back to trading and following your trade plan, and there are a few people in here who are very, very, very well. Russell for yesterday. I moved it. I'll have to reload it. I apologize. I moved the zone. This was a yellow zone right here. The yellow zone was literally right here yesterday, right? And this was the long I pointed out yesterday. The yellow zone was sitting right here. That gave you your 2 points you were looking for from the front of the zone. I had a few people take that. For those who are following their trade plan consistently in Russell, they are doing very well, right? First touch of the zone, looking for 1 point, then 2 points, moving your stop to break even and trailing out of there, right? Let me go to, since this is useless now. I'm obviously going to run over by a minute or two. It's gap up. I'm going to let them play with it, see what they do. Let's clear this. There we go. So this is NQ, right? Notice we pulled down. We were inside Thursday's range, right? So what do you know about one? Let's go through this so that we can learn this and figure out what's going on, right? We've gapped away from 3 days down. See that? 1, 2, 3, gapped, right? We had a solid high. We are currently gapping. By the way, I should put that on the NQ chart. 63.4850 is your Globex high. Let me put that in really quick. Rid of this. What you will notice is 2 ticks in front of the white zone, right? I'm obviously not going to short that, right? Globex low came in. $63.11 1/4. Which was almost perfect. Okay, just behind the white zone. Made sense. Okay, you'll notice, right, that I put these naked volume points of control, but I did not put a zone there. I lifted a zone that was there, right? Again, same reason. We got very close to testing it. It's relatively easy to test back up. I would suspect into 63.35, 63.31, you'll find someone who attempts, you'll find someone who attempts to be a responsive buyer in that location, right? Again, I have 2 very clear areas that I want to buy in. I'm looking for half gap, which would put me into these NVPOCs. I'll probably try to fade in on half size into this area. Again, I'm looking for a push out, right? And the open gap, 63.15. I seriously doubt we get either one. That's where I'm looking for the responses, right? The concern is, of course, if we get to half gap, is that you've trapped back into prior day's range, but we're in a bull market. So I would suspect that you're going to get a response. I would never take that trade in the bottom half of the market. If we were down, that would be very concerning trade for me to take. But again, because you'd say it's a failed rally, but because of the environment that we're in, we'll look for responsive buyers in those areas. It's essentially a mirror image of what I have on ES. I'm not fading this white zone. Yeah, but that's pre-market. It just doesn't count for me. What I want to see is the strength of the open, Daniel. It's just not worth it for me to take it. I'll go over to the profile in just a second. So if someone wants to short it, be my guest. It's not. So the easiest way for me to answer that is it's simply not in my playbook to short a gap up. Right? Tick is positive 1161. This is a gap above prior day's high. It is a low odds affair. If you did that 10 times, you're right 1 time, you're going to lose the other 9. So I hope your risk reward is insane on that, right? And then to go to the chart that I posted yesterday, right? The advanced decline line. Advanced decliners, advancers, 1825, right? That is not a candle I want to short, right? That is not a candle I want to short. I don't have a short in mind. It's Thanksgiving week. Sellers have zero reason to be aggressive up here. Doesn't mean they can't be. They just don't have very much of a reason unless they're just going to just have a massive profit-taking day. My risk reward lies in looking for longs on days for today or not trading, one of the two. I'm more interested in protecting my capital and looking for where I'm going to get the 5 to 10 points on ES, or where I'm going to get 20 to 30 points on NQ. Again, I will still point out the scalps, and that's the one adjustment I'm going to make. You'll notice the zones are back to being normal, and so I want to address this for a second for the whole room, right? The zones have a high win rate. It's been a win rate of almost, if I understand correctly, we have a win rate of almost 85 or 90% over the past several months on the white zones, right? So let's jump back over. Again, we see it. We all know what the protocol is. I put the video out to members last night, right? So let's talk about the zones for a second. As we push into key locations, so in this case, we're not going to get one, right? But let's say we pushed into this area, right? And this 25.65 to 63 was a key location, which it was. It's 20 down, right? You will see me about a point to a point and a half in front of this zone starting to fade in, and my stop will simply be wider through here, right? Again, this is not a 20-point stretch. We can remove that. Sorry, I got to put it in. Again, this is a green zone, but again, in here, this will be an automatically half size double stop in this location. I want to be long in this area. I want to be long in this area, right? And then I'm looking for my, if I'm starting off half size, right? So I want to make this clear what the pattern looks like. I start off half size, and then I get a pattern like this, right? So if you'll pretend with me like this was, here, we'll just go find a down day. Okay, so pretend this bar was, we haven't had a good down day where I got to get, here we go. Okay, this is my last seller right here, right? And I get above my last seller, right? On that retrace back, I am bumping to full size on this trade, and I'm moving my stop a point or two below the swing low, right? So I want to be clear. When I enter, I'm entering on reduced size, right? I'm then looking for this specific pattern. I'm being very clear. I'm looking for this specific pattern, an engulfing candle that's getting above my last seller, then a retrace back in, right? And whatever I've scaled on this, I will add, plus bump the trade to a full-size trade for a push all the way up back to the upside. That's my trade plan there. There's no secret, nothing else to talk about. That's it, right? I'm not overanalyzing it. I'm not overthinking it. I hope I get something like this and I can get above my last seller, right? And that's my 2 cents. That's my trade plan in those areas. I will think of a better way to denote swing locations within the chart without making them too messy, but pretty much that's my plan. Is the deeper we get in, I will end up essentially front running my zones and spreading my risk out across that zone up to half size, then bumping up to full size once I get my reversal candle out of that, and I will be looking for this swing back up, and I will be pushing these trades out looking for exactly this. Now realize some days, right, what I'm going to end up with is this, where we just go sideways at the bottom. That sucks, but c'est la vie. That's how that'll work. I still should have great location. I still, between scalping in and out of this, I still should be able to make this work to a profitable trade, but this is what I'm looking for. Okay, that's where my RR is. Okay, and that's my 2 cents about that for the day. Let's go look at the profile real quick since we're running a little bit late. Again, new highs on NQ, zero desire to short this. I cannot stress it enough. If you know something I don't know, be my guest. I would be trying to find a way to get long this thing, or just going, which I am saying, which is this is not my trade plan. It's not how I make my money buying gap ups. I know they're exciting, but not for me, right? Same thing on Russell. There's no reason to be shorting that, in my opinion, and there's no reason to be chasing up. There's my location right there on Russell. On NQ, here I usually have these reversed, so I'll reverse them back over so everyone knows where they are. There's NQ. Here's Russell. Make Russell a little bit smaller. I really don't modify the trade plan there much. Make ES a little bit bigger. Again, NQ is pushing up to the white zone. If you're highly adventurous and you're all right with the loss, that is location on the white zone, right? Again, if you're highly adventurous, right? Obviously, people are long overnight. This is location if you're looking for a short. Just way too strong this morning for me to take it. And so I'll just look at it and go, huh, that worked, which it probably will, right? At the end of the day, when I usually look back at the white zones and I have a reason not to take it, but no desire to get crushed this morning. Let's go over, look at the, and remember, so this brings up an important point, right? When you're a professional trader versus I am a trader, right? So some traders show up every day, right? So some traders show up every single day and go, where's my trade, right? Professional traders don't do that, right? Let me be really clear. If you ever trade on a professional trading desk, a hedge fund, anything like that, right? They do not do that. What they do is they have a set list of these are my top setups, right? These are the circumstances I look for to pit up risk, right? And then they go and they go, if the market gives me these setups, and granted, those setups will adjust based on the environment. That's your job as a trader, is to adjust to the environment, right? But if those, when those traders come in, they will adjust. They constantly work on refining their edge, but they pretty much know ahead of time what they are and aren't going to do, right? I know what I'm going to do ahead of time, right? We had the first 5-minute bar printed green. Again, your stop is right below that low. If that's a trade you want to take, if you believe we're going to push up all day, which is not a hard belief to have today, right? Just make sure that's in your trade plan when you're taking it, and you're willing to take it over and over. Because if you're going to take it this time and guess whether it works today, and then the next time look for a reason why it's not going to work. This is important. So I'm going to stress it. If you're going to take it this time and not take it next time, you totally, let's say you have a 7 out of 10 chance of that trade working, right? But then you start randomly guessing which 7 out of 10 are going to work. All it takes is 2 missed calls on that setup to turn you into a 50-50 risk reward, right? 50-50 win rate. All it takes is 3 bad calls, 3 emotional calls to turn that into a sub 50% trade, right? So all of a sudden you go from 70% win rate to a 40% win rate with 3 bad emotional decisions. So the next thing you want to ask yourself as a trader, am I a person who consistently makes very high-level trading decisions on the fly? I am. I actually know. I get very concentrated. I can read the PA, and I make pretty good calls on the fly, right? But they're not as good as my pre-planned trades. I can tell you that. They are not as good as my pre-planned trades, okay? And what I lose when I switch to making trading calls on the fly and trying to watch every tick to make that decision versus going, I did my homework. These are the areas I'm interested in trading in. These are the specific patterns I'm looking for. What I lose when I make that trade, when I go through that process, is that I become addicted to watching every single tick in the dome, right? I want to say that again. I become addicted to watching every single tick in the dome. And when I do that, I lose sight of where the trade might go, okay, which is the purpose of understanding structure from the standpoint of the profile, right? That is the entire point of having structure from the profile, is to understand where you're going to get help and understanding, right? So it's the difference when you start driving. Remember when we all started driving, we stare at the steering wheel, right? We kind of can't believe when we turn left or turn right, right? You want to look at that wheel turning, right? And the first thing I tell you is look where you want to go, right? If you've ever raced, that's the first thing I tell you. Don't look at the corner you're in, look at the corner you're going to, so you can line the car up properly. So we want to look at where we want to go, not where we're at. So now let's go discuss what this looks like from a profile perspective, because I've got no trade to trade, right? I'm not going to short this. I already made it clear, and it didn't pull down. This is open drive higher. There's just buyers have it. That's my assumption. Again, what do I need to see to even consider shorting? Over an hour of sideways consolidation and then a pattern to set up within there, whether I'm drawing it up on the profile, get a high volume print. There's multiple things we can look for the setup, but I'm going to have to see it first, right? So that's open drive higher. We're not even close to a 0 tick. Buyers got it, right? Let's just make that assumption and make it easy on ourselves. The only thing to do would have been to buy the first 5-minute bar. That was in your trade plan. Congratulations. You're making money. So let's go look at this really quick. And I want to push you again, guys, particularly guys I'm coaching, but everyone in the room. I want to push you. I want to push you to being consistent over time, minimizing your drawdowns. The goal is to be consistent over time, minimizing drawdowns. No one day matters. No one trade matters. So long as you are trading within your trade plan. And it goes both ways. When you are down and you're frustrated, you tend to trade away from your trade plan, you being anybody. When you are up and killing it, you tend to want to trade away from your trade plan, right? And I want to give you an example of that really quick to come back to NQ really quick, and then I'll come over to this. Yesterday afternoon on NQ, okay, I posted this on the private Twitter stream, right? This is prior day's low, right? Prior day's low, delta push, volume push, no tick push because that NYC is way up here, right? It's not even thinking about going down, right? Push, right? Heavy volume, right? I pointed this out in the Twitter stream. You could have waited all day till 11:30. I came back in the room because I was about to leave for lunch and pointed this trade out, right? And if you look from the time we push in, trap. So look at everything that happened, guys. We trap back in, right? Number one, we get back above our last seller, right? See that? Number two, see that right there? This had everything you could possibly want. And if we look at it from a 24-hour perspective, right? We change this to an overnight 24-hour perspective. And we'll do that so you can see this. Right, we are right over here. Let me get this straight. Here we go. Prior day's low is approximately right there. Wow, I went way over somehow. There we go. Prior day's low is approximately, what is wrong with this? Oh, it's loading the data. That is what's wrong with it. Got it. Prior day's low is approximately right here. Break below on a volume push. Biggest volume push down. Again, no reason to be short, guys. This is why I'm not interested in shorting. For those who took the first 5-minute long, congratulations, you're getting paid. It's insane to short a gap up like that. That's all I can say. You are asking to have your ass kicked if you do that. Okay? Push below. Press below prior day's low. Close back into prior day's low. Close above. We get above my last seller right here, right? I drew this up on the, again, I posted this on the private Twitter stream, right? 50, 60 back, failure to get below the low. So what we wanted, right? What we wanted was this, right? We wanted this to get over here. It just, for whatever reason, everyone was, for whatever reason you want to point out, traders weren't interested in pushing yesterday afternoon, right? But if you took that trade, right, you took the push back above. So imagine all of this, compact it back into intraday, and you put your stop right there, right? From the time I pointed this out, right, this is less than a 10-point stop. This is $200 a contract, right? Less than $200 a contract. And then what we were looking for, obviously I wasn't looking for a push to 63.65, but I figured we could get back over here, right, to 63.29. That was the setup. I would commit that to memory, right? If you need help with your memory part or the imagination part, take this and just move it all over here, right? That is the trade you're looking for. And then if it really breaks away, this is a powerful setup, guys. I cannot stress it enough. It's where all the money gets made. And you knew the location, right? You knew what the pattern setup looked like. And, right, very, very importantly, we've been stressing in the room, get above your last seller. Look for a way to get long against that last seller. hold on for your risk reward to come out. It didn't pan out yesterday, right? They closed it at a profit. They just didn't push, right? But if you do this 100 times, right, and you let it stretch 100 times, I mean, I'm going to let this thing push out like we did the other day when we caught off the low, right, 2 weeks ago. You're going to end up with 2 or 3 monster days a month, 2 or 3 monster days a month, right, because you recognize the pattern right in the sweet spot for reversal times, 10:30 to 11:30s, very sweet spot for reversals, back to the upside, right? Very powerful pattern. Sellers had no ability to push whatsoever. You will end up with months where you get 5 or 6 of these. You'll have other months where you get 1 or 2, and you'll have monster opportunities. Raul's pointing out that 25.98 is an area of interest for him. Again, it's not for me. Let's go over now. Does anyone have any questions about that? Okay, let's go look at the charts now. Finally, I got to find a way to compact this up, but I haven't done so yet. Okay. I'd memorize patterns. That's what I do. That's how I get good at trading, right? Yes, we pushed down. Yes, we got underneath value the prior day. If you'll notice, so this was pretty impressive yesterday. The other clue here from yesterday was we got underneath value. We didn't close back into value. Normally what you would say in that case is an inability to get back into value and overlap value here, right, would mean that you would push down, and the logical location was to here, right? They had sellers, right? What I try to think about here, sellers had every opportunity to step in and push, right? It was weak. They pushed below prior day's low, right? The market wasn't overly strong. We're underneath value. This was an opportunity, right? You got to look at this as a football team, right, that's inside the 5-yard line and first down, right, and can't convert. That's what this was. This is the result of the inability to convert. They turned the ball over. The other team, the offense, the Bulls, run it for a touchdown, okay? And we saw the exact point at which they failed to convert yesterday on NQ was the push below prior day's low, heaviest seller of the day, and they got above him. It was all over from then. The fact that it took 12 hours to work or 10 hours to work is not a point at all, right? The fact is that's what happened, and you have to read it and go, hey, bears have an opportunity here, right? And they couldn't make it work, okay? So that's how that looks. If you want to see what that looked again, right, when we got here, right, notice we failed to hold into prior day's value. Bears attempted to push. They came all the way back up. We knew that this U-turn was coming. They gapped over here, right, just like they did here. They gapped back to the top side of value from the prior day. They essentially traded all the way through value overnight, and you'll notice we closed not at the high, but at an extreme, right? And then they started that process over again. This is by definition a pullback to break out, right? So now we start the whole cycle over again. It doesn't mean that we can't fail, right? But if I'm going to look for a failure, let me go over here. Let me show you what NASDAQ failure looks like so you can see. So what am I going to look for failure? See, these days we're shifting up. Value keeps shifting. Value keeps shifting. Value keeps shifting. We stay on top of value, right? See how we can't get below and hold below? And we keep closing at the top end of value, right? The next day we come in, we gap down, right? Notice, so if we break out this day, right? Notice we open up and push up where we make an attempt to push into value. The whole first 2 hours goes, we fail to get back into value. Everyone goes, wow, we are underneath. We are underneath. Everyone goes, we're underneath value, right? Oh my, I'm a little scared. We're underneath value over here. I can't push back up into prior day's value. And now bears did not fail to get a long liquidation. Where do they trade through? So remember, we had to get all the way through this day's value, right? And remember, it takes energy. It takes energy to push through value. This is where 70% of the volume went off on the 3rd. So when we get down, we exhaust all the way down. This is a rotation from 63.09 to 62.50. And everyone goes, wow, I'm pretty tired. We come back in. We get above our last sellers. This is a half-hour bar, right? And we push all the way back up. This is what I'm looking for. This is the meat of my trade. And I'm also looking for this, which is why yesterday I was like, hey, yesterday when we were back over here, I was like, hey, we can't get back into value, right? Back over here, we can't close into value. I was like, we could push, right? That was my initial thought, was we could push down. Well, my next thought was when we got underneath prior day's low, right, created excess at the low, right? Created excess at the low, right? This was the push below prior day's low, closed back in, right? My thought was, hey, we're going to push back, and now we are going to go through value because this is where they had the opportunity. Let me show you the difference, right? See over here? We were already below the prior day's low. That was going to line up right here, right? That's prior day's low. See how we pushed in? 1, 2, 3. Couldn't get into value. Closed below, right? We made an attempt. We go 4 wide. 1, 2, 3, 4 wide, right? Every push away from the point of control gets drawn back like a magnet, right? So remember, we've gone 5 wide here now, right? So everyone goes, oh, crap. Everyone who bought for the reversal here, not looking that value was sitting on top, got caught out. We long liquidate them. Where do we long liquidate them? Against this entire day's value. We get below value. We had to spend a lot of energy to get down here. We basically shook out and fixed the auction from everyone being a little too cocky and confident up here, right? So everyone who chased up here gets shaken out. Everyone who bought down here, us, got long, right? And then what does the market do? Okay, we've taken care of these guys who are confident, right? The next day, right, we close at the high. We open up. Look at the pattern from the next day. Next day we open up, right? We are inside prior day's value. What do I think of immediately, right? What do I think of immediately? Balance, open auction, inside prior day's value. That's what this is, right? See how we just spent 2 hours going back in a small range, right? Unable to get below value. If we're not below value from the prior day, I'm not particularly bearish. Granted, there are some outliers where we can sweep through value and have a trend day down, particularly off the highs, but that was not the situation, right? The following day, if you look, right, we opened up. This is where we opened right down here. We opened underneath value, right? Notice we immediately drive back into value. On this date, right, if we had come right here and never closed back into value and consolidated underneath, my target would have been a retest of the single prints back to the low to the left. Instead, we open up, we push through value. Now we get on top of value. We backside test it from the prior day one more time, and we hold. Now look at the next day. Next day we open up, right? We are unable, see this? We open up, we push down, right? So we opened up, we were below value, we pushed down. That made perfect sense. We push back up. We trade sideways for what? 2 hours, unable to push back into value. We trap buyers again because they don't have any support, right? So think about these guys. When you're thinking about value, right? So I try to make this profile for dummies, right? Because that's for me, not for y'all, for me, right? These are your, think of these pink areas as your helpers, right? These are the guys, these are your allies. They're going to help you in this process of making money and losing money. When you're below these guys, think of them as putting weight on top of your position. It does not mean we can't push through. We can. There's examples of it, right? But when we tend to not push in quickly in the morning, we tend to get these rotations back down, and I'm more inclined to look for short positions against value where I know I've got helpers helping me out. And then I also understand the flip side of that. As we stretch, market runs out of energy. So when I run away from my helpers, right, these are my supply lines in military terms. As I get away from my supply lines, right, I'm going to exhaust, and the military is going to have to come back for resupply. They come back. We trap a whole new group of traders who think, boom, again, we're going to gap fill, right? They push again. And if you do that same story here, right, you understand why I don't want to short. I've got no help, even if it's right. I'm going to have to count on exhaustion. So what I have to count on up here is exhaustion from my other trader friends to come back through here and get resupplied, and I'm not interested in it, right? Because it requires me to figure out where they get exhausted. It's not my cup of tea, okay? And so for right now, we have no friends. And if you look at how this process worked when we break to new highs, so here's a break to new high, right? Look how the process worked. Get familiar with this, guys. My support, my support, my support, my support. Up underneath, I've got 1 day of resistance, right? I get above my resistance. Here comes my support, push. Here's my support, push. Here's my support, right? I got to get underneath my supply lines, right? These guys are my allies until they're my enemies, right? And if you look back, it's always the same story. Once we get underneath, right, above, and you'll notice that we use those areas of value, right, as support areas. Again, I want to show you this. Look how this day broke out, right? In this particular case, we opened above value. We swept through value, and we closed underneath value. Does everyone see this? I would not want this to happen. So the next thing I want to know is I want to get back into value. Open, drive lower, sweeps through in the first half hour, right? So where do I think we're going from here? Oh, we've gotten underneath my value area. We're going back somewhere in here is my thought process. Notice that we roll right down to value. It's a big stretch. We come back up. We spend 1 hour attempting to get back into prior day's range because this is prior day's low. Notice that we bang up against that for an hour, right? Right in the middle of the day. Failure to do so. Close at the low. Roll down. These guys have already acted as my help, right? I don't have any help here. I'm going to sweep to the other side of value. I'm going to close. The next day, see how my value is up here, right? I open up. I'm below value, right? Now, notice here I've closed back into value. See this right here? I'm no longer bearish, right? Because when we're really bearish, we don't close into value. We closed in and traded into the prior day. If you'll notice, we finally get through here. 1, 2, 3, 4, 4 wide, 2 hours after rallying after low. It is hard to accelerate to the upside after you've done this, right? It should have been 2, maybe 3 bars max. We exhaust one more time, exhaust back to the downside. Following day, you'll note we push into value, right? See how there's a pattern here? We failed to close on that half-hour bar into value. See how we opened up, right? We attempted to push in. We failed out. We're below all our help, and we push down, right, until we exhaust and trap all these people. We finally exhausted. It's 1, 2, 3 days down, get the V shape, and then we start the whole process over again. That's how it works. So that's why this morning it was a very easy choice for me, right? That was a very easy choice yesterday with this trap. This is what I was looking for. I wasn't looking for this, but I was looking for a trade back up towards 63.31, right? And it's a very easy choice for me to go, hey, so when you're thinking as a trader and you want to think, so you alone, no matter how brilliant, if I was Einstein of trading, right? If I was the Einstein of trading and I was the only one who saw it, right? It would do me no good because I need help from my friends, right? My allies in trading, whether those friends are the people who are buying up high and trapping themselves or panicking at the low, right? I need assistance from others, right? If I go, hey, everyone's panicking and I'm the only one buying, guess what? I'll keep losing money because it'll keep going down. If it goes up and I'm like, so let's say I look at the call and I'm a genius, right? And I look and I go, hey, 63.73, the market's overvalued now, right? Market's overvalued. This is going to be the high for the next decade, right? And no one else shorts it with me. No one else sells it with me, right? I want to be clear. No one else sells it with me, okay? I lose. Even if it turns out that tomorrow's the high and I go in 100% and we close it. Let's say we close at 64.70 today. I get margin called and called out, okay? Does not matter. And let me tell you, I want to give a very clear experience of this. When I ran I was a partner in a IB, introducing brokerage firm. We had a hedge fund that traded through us. They were based in Arizona. Okay. They were based in Arizona. And it was the British pound. And they said 2-to-1 on the British pound. They called us and they said, hey guys, short at will. This is the top on the British pound. Okay. I should. I should show you a chart of this so you can see just how painful this was for these guys and their investors. Does anyone know the symbol for the British pound on TradeStation? Is it GB? Anyone? Anyone? British pound? I don't even remember. It's been so long since I traded the British pound on TradeStation. I don't remember what they use for a symbol. I'll look it up. No, that's not what I want. Symbol. That's not what I wanted. Futures. Oh, there we go. At BP. Okay. And we got to go back a couple years. First of all, let's go to a big time frame. Daily. It had to be 2007. There we go. Right here. See this? This is the all-time high. Okay. These guys ran a $50 million hedge fund. Okay. And I'll show you this beforehand. Format, symbol. What year is that? There we go. 07, 08. Here we go. So we'll just go back here. There we are. That was it right there. So see this right here where we hit this high at 206? I went too far back, but the point will be taken because you know where it's trading now. See this right here? We went from 2.02, right? So right here, now I'm too far back. Format, symbol. There we are. Okay, see that right there? These guys right here, called up and said, that will be the multi-year high at $2. They said that will be the multi-year high on the British pound, is what they said. Okay. And guess what? They were right. That was the actual multi-year high to this date on the British pound right there. Right here, they have $50 million. Right here, they had $1 million. That's how much they had left. Not only that, but we were calling Goldman Sachs and JP Morgan, begging them, literally begging them to let them pull their puts in. Okay. That's what they sold calls. What did they do? They shorted the calls. They shorted the calls, shorted the currency, and bought the puts. All right at 2, right? And we could not let them on the calls we shorted. They shorted so many calls here that so currency and options on futures work differently. It's not a liquid market like it is today. Back then, you literally had to have cross trade agreements with your counterparty in order to trade, like full legal contracts that said, I agree to buy from you, I agree to pay from you. It's like we literally made a contract with each other. It's not like where we just go buy ES or go buy NQ, right? You had a counterparty agreement, okay? And we were literally on the head of with the president of Goldman Sachs, right? Our prime broker, my firm, right? Because we hadn't taken a hit yet, but we were about to. This is why I sold my portion in the firm. We were on the president of Goldman Sachs, not the CEO, but the president of the options trading division, the president of JP Morgan, and we were trying to explain to these guys that these guys had no money to cover if they didn't let them buy. And they were literally restricting them to buying every level, right? They would only offer 1 or 2 contracts for them to pull in, and they were short hundreds of contracts, okay? And they literally would not let them cover the position, right? And this is where we finally agreed to let them long liquidate, was right there, right? And they were right. They'd have made millions upon millions of dollars, but they so leveraged and they got the call wrong by approximately a week and a half, right? A week and a half later, and you know what the funny thing about that is, guys? All they had to do is this. Wait for a break, right? Wait for a break below your last swing low right here, right? So now go back to what we do on a daily basis. Hey, I think it's short, right? Great. First thing I'm going to say is get me below here, number 1, right? Number 2, I'm going to go, okay, we have a new swing low. Get me below here. You get me below here? Okay. 50, 60 on the swing. Notice you had to be patient, right? You started getting bearish over here November 5th. This is December 17th, right? Daily charts, right? All they had to do is lay in here, right? Calculate for the risk against a stop up here, right? And it never comes back. It's see you later, right? You are huge. By the following year, right? It was $1.40, right? Look at that. From there, they had the call exactly right. Instead, they ended up in years of lawsuits for mismanaging other people's money, right? And for losing $50 million. To this day, the guy can't get back in the business. He's a genius, right? And he can't get back in the business. Also, even if he didn't get the call here, right? He didn't get it here. All he had to do was wait for an impulse move lower, right? Biggest sell bars. Even if he was managing risk remotely positively, 50 retrace, right? Even if he missed the entire move down on the first leg, right? 50, 60 back. Currencies move in 50, 60 retraces, right? There is never a time, an opportunity, or a place where you have to call the top of a market, the top of a day, right? Markets become volatile. If you don't see it, right, wait for it. It'll come, right? There are setups that do not force you to come in. I literally saw someone lose other people's $50 million. It was pretty incredible, right? And I'm sure Victor Niederhoff, same way. He'll short and keep shorting through this. He's lost billions 2 times, right? You don't have to, because I promise you in this area, think about this. If you were bearish, you finally break your last swing, right? And look how much time, even if you missed the initial push down, look how much time you have to work that position in after you get the break. A lifetime, right? This is all the way to March. This is an entire quarter to load this position in. Even once you get into the critical area, right? If you want to use a 50-60, now you can measure risk against the high, right? Even if you get into this area, right? You had 1, 2, 3, 4, 5, 6. You think in 6 days, you could put on $50 million in risk pretty easily, right? Without anyone noticing your footprints, without ever endangering yourself, and you simply put a stop somewhere reasonable above, right, to get confirmation. You could even wait until we broke below the last swing low and still done it again, right? If you wanted to measure that, you wait for the break here, you take the 50-60 back, you put a stop above the high, and you still have a reasonable trade. And you, again, you got paid, right? So they had the call correct. This had to be, I'd have jumped off a building. No, I wouldn't have done that, but I'd have felt so low after getting that call. They were exactly right. And for 0.08, they went broke. So lesson to be learned. So at any rate, for me for today, what do I need to see? What would I want to see in order to get short? Very simple. I want friends. I want impulse moves down. I don't have to be the first one to the party. There's zero glory in me for me calling a short. And by the way, from the video we put out yesterday, right? Very clear. Going back to the video. So we can get rid of this. I don't want to trade the British pound anytime soon. From the video, first 5-minute bar is your entry. Did anyone take this entry? I didn't. Obviously, I was talking. Right? Doesn't fit my parameters. Right? And from yesterday. Advanced decline line, first 15 minutes, 2,000. Suicide short. Right? Don't do it. There's no reason for it. You should not be thinking short. Big gaps do not fill. It's my advice. Right? So I don't know if there's anything else for me to do today. I've got several coaching sessions that I've moved up this week that I'm going to try to fit in earlier in the day. There's nothing for me to do here. As far as I'm concerned, I saved an enormous amount of money on what was a 30-point rotation straight up off the open. Right? Any cues? This is the time to ask. I'm good to go for questions. Hey, Mike, I'll send you an email on that. So long story short, guys, if you did not get run over, right, because I promise you there's a whole retail trading world who are obsessed with gap fills, good luck, right? Again, I wasn't going to short here, wasn't going to short here, wasn't going to short here. This is a great read. This is a great filter to keep you from getting annihilated at the open. And if you're aggressive enough to take the long off the 5, it doesn't fit in my again, doesn't fit in my parameter. But man, oh man, when I was younger, I probably would have just taken the long. I just know I'll get my setups like yesterday in other places. Anyways, that's my 2 cents. No one else seems to have any questions, right? Wow, that hurts. I can understand why you'd be upset. Don't turn that into a losing day, but obviously I don't think you will. Yeah, I agree. And that's why you have to have the right stop, right? The right stop on your trade, which would have been for me at least below yesterday's impulse move back in on NQ, right? So the way you take that, Mike, is you go into your journal, right? And you go, the stop would have been below yesterday's low at 63.04. Right. And so you want to go, okay. And that's why in the room, Mike, can I share that with everybody? I know you sent it to me. Can I share it? Okay. So Mike was long and his intention was to go long 63.11. Was it yesterday afternoon? Okay. Was it into this 50-60 back? Or was it over here at the trap? Okay. So as long as was the 50-60 back to hold overnight, right? Okay. So I talk about this all the time because it really sucks when you get it right and then it rolls against you. Okay. The way I look at when I want to take a trade, and Dalton, who's great, covers this all the time, right? And I say, this is how I say it. Dalton says it another way, but there's the trade you want, the trade the market demands, right? And then the emotional stop that you use, right? So everyone wants to get it tight and perfect. But what I suggest people do, the guys who are best at trading, that's when they move to structure and trading structure versus trading price, right? So Mike, the way I would have done that is I would have said, if I'm going to take this trade, right? If I'm going to take this trade, so you moved your stop to break even, right? Because it sounded logical. Is that basically what you did? After you got above, you moved your stop to break even, and you figured if it doesn't come back in Globex, okay. Well, it's logical from a non-trade plan perspective, right? You go, well, I don't lose any money. I've got a free ride. If it works, it works. If it doesn't, it doesn't. That's kind of how people usually read that, right? And and I've done that many times. The way I'd prefer to look at it is going, look, my risk is to below Monday's low, right? I want to at least sustain a test down to Monday's low. And then if I can survive that. So a couple people in the room were long here yesterday and got really frustrated because we couldn't get the push out, myself included. I took the long on the trap and I left. I actually was so confident that trap was going to leave. I left. I just left my stop sitting back here. And I even sent a message to Ron late in the day. I was like, I hope I don't get stopped, because we were in here and I saw this bar and I was like, I hope we don't get stopped. I'll close it at the end of the day, which I did. And I left. I went to take care of some stuff that I had to take care of. And long story short, two things about that. The proper stop had to be below the back of the day, and you had to look. And so that's when you want to go look at all your trades and push for, what are my setups that give me a huge risk reward? And you were right. This is a huge risk reward right here because of the trap, because of ES strength. At the end of the day, you had the read exactly correct. And so I'd go back and look at all the times I took this trade and figure out what stop kept me in. My guess is going to be if you kept your stop below the swing low, you get this a bunch of times on that read. And that's where to speak about the moving the stop to break even, I know it sounds logical. Retail traders do it all the time. I used to do it. It's not logical, because when you look at this from a structural standpoint, this structure was really important right here. You should have written down, that was a really big deal. That was the heaviest volume push. They couldn't get above. I spoke with Bill yesterday, who pointed out the same move on CL, right? And they trapped back in, and he was absolutely correct. We've gotten above the last seller. That really put the, right? So what you would have wanted to think about, Mike, the way I would have thought about it is I was like, wow, someone really, if you remember the volume bar, really pressed hard below here, right? This guy, whoever sold here, is going to be really desperate to cover in here. He had the highest volume of the day of the RTH session. And so once we got behind this guy, you should have been thinking strategically. You should have been going, that guy probably wants to cover. We're not short unless we get behind him again, and he'll gain momentum, right? And then obviously once we gapped up, it was all but over. But that's how I would adjust that. And the way you fix that is you go in your journal and you think about what you were thinking. You write down what you were thinking when you moved that stop, and then ask yourself, was I thinking about what my opponent was having to do, which was he was trapped over here and we were going to have to get behind him. And if we look at this, if you also come back and look at this from a 24-hour perspective on the profile, right? This is my guess here. If we come back over here, okay, see that 6309? That was the point of control. That was the heaviest volume of this down bar, right? And if we add in the overnight, I got a feeling it came right back and tagged it and went. Let's see. Not even, right? So see that was the backside test into the closing hour, right? So it came up, right? We got the bar. It came back to check on the highest point of control, the volume point of control from that bar, and then they never got back to it in the overnight session. And that's how that worked. So the good news about that, Mike, is you have room to improve. You recognize the trade, right? You recognize the opportunity. You waited for the pullback to get your location, right? And so now you know next time how to handle that trade and improve your process. Since I can guarantee you, I've been doing this for 20 years. We've never had a lack of these days. They show up. It's nice to get them. They're big paydays, right? And we did a great job not getting everyone in the room. No one's short, right? No one got killed short. So that's my 2 cents. Anyways, I'm going to take a break. That was the longest opening session I've ever done, I think. Buyers are in control. No need to short. You did not miss anything, right? Unless your trade plan says I'm an expert at trend day up, right? I'm very grateful that I introduced the tick read yesterday. That really helped this morning. And now you know if you open up with a 2000 tick, you almost want to get long right off the open if you can. I'm going to have to think through what it looks like when it fails and comes into the gap fill. I'm much more comfortable with that trade. Obviously, if you look here, anyone who's been looking for a short, so what do I want? I want sideways trading for preferably over an hour and a half to trap late buyers, but there's literally nothing for me to do. There's literally nothing for me to do on these markets. So I'm going to, we are into a critical area on Russell, but again, I'm not looking for the short. Now, the one thing you do want to be aware of is if we get behind the 62 retrace of any of these moves, right? Do not be surprised if we get a long liquidation out of that. Now that we have trended up, you do not want, it cannot be any clearer than this. You do not want to see it behind the day's 62 retrace. Would be very concerning for me. Okay, so anyways, that's my 2 cents, guys. I'm going to take a pretty good break here. I hope that helped this morning. If y'all liked it, by the way, for guys that are on YouTube, if you like the YouTube, it really helps me out with customer service on the YouTube side. So please, please, please like if you can. And other than that, I hope everyone did okay. Don't short big gaps. Doesn't make any sense. We still haven't made it back to 0 tick, right? And that's probably just indicative of holiday trading. So that's my 2 cents. I'll be back. By the way, for the guys who joined us on YouTube, thank you. I am for guys who joined on YouTube, thank y'all for joining this morning. I'm going to kill the broadcast now. Mostly, there's just nothing for me to teach or do. This is straight up market. So, anyways, that's my 2 cents. I will talk to you later. Have a wonderful day. Happy Thanksgiving. I will be recording the preview for tomorrow because I do not intend to trade tomorrow. So I'll be posting the preview, and I'll be back on Monday with the live market previews. So I hope that helped. And unless I change my mind or unless the market's moving dramatically, Friday's a half day. Thursday, the market's closed. And I'm outside of the one-on-one coaching sessions, I'm not doing much tomorrow. So I will talk to you later, guys. Have a wonderful day. Thank y'all for joining. Happy Thanksgiving, wherever you are. Let's see. How do I kill that?